Greetings and salutations, Series 7 test takers. This is Dean Tenney coming to you from my studio here in fabulous Las Vegas. The best free supplement to your paid study materials is my YouTube channel. But the best paid supplement is a Kaplan Q Bank if it's not already in your possession. With my 10% discount code at checkout for all Kaplan products and services, this comes in at about $58.50. I'll put a link in the video description, as well as a pinned comment where you can have a link to order a Kaplan Q Bank. For that commercial, Kaplan lets me give you free look on Kaplan content. This is a request for an explication. We do have explications from any test prep vendor. It doesn't have to be Kaplan. It's just easier when it's Kaplan because I can pull it up backstage. You don't have to cut and paste it and all that kind of stuff. Anyways, a new customer has been approved for all levels of options trading and has signed the options disclosure document. Even though approved for all levels of option trade, she notes she will not be employing, and you, the rep, should not recommend any strategies with unlimited loss. I think it's very important as a Series 7 to know what exposes a customer to unlimited risk. There's not many. It's a handful of things, right? A short naked call, uncovered call, is certainly subjects an investor to unlimited risk. Shouldn't be struggling with that. So we're not going to recommend short naked calls. Short the stock, we're certainly going to recommend that. That has unlimited risk potential. A short straddle, remember, has unlimited loss potential, because don't overthink it. It's because that short straddle has a naked call. And then a short stock position not effectively hedged. Short stock position not effectively hedged is a short stock and a short put. That still has unlimited risk because having an obligation to buy back the borrowed stock puts on a floor. It doesn't have a ceiling. It can still subject to unlimited risk. So those would be things I would not recommend. Now, it's kind of silly to short a naked call because you could do a credit call spread, right? And if you do a credit call spread, you don't have unlimited risk. And if you're short the stock and you establish the choice to buy back the borrowed stock at a set price anytime between now and some future date, you wouldn't have unlimited risk. So you could effectively hedge a short stock position. It means I could recommend that. Short the stock and long a call, because that wouldn't subject her to unlimited risk. And I could also recommend a credit call spread, which is a way to take that money for that short call without taking all that risk. All right, well, let's do the reveal here. And let's see, we're looking at, it says, given this criteria, so we're looking for something that has limited risk. That's what we're looking for in this question. A short or long spreads. Yeah, all the action, profit and loss, and a spread takes place between the strikes. So you should have definitely known that spreads do not subject, whether they're short spreads, credit spreads, or long spreads, debit spreads, they do not subject clients to unlimited risk. Short or long straddles. Well, I like this as a test taker. Any part of the answer that is subjects to unlimited risk means it's a problem. So long straddles don't, but it says short or. And that means if I recommend short or long straddles, that will expose her to unlimited risk. It's the short straddle. So I agree the grammar can be challenging here. C, short and long uncovered calls, or long uncovered calls. Again, same thing. The short uncovered call is a naked call. So my guess is that the test taker who requested this was struggling about long straddles and long covered calls. It's the or. And you're saying you can do either of those recommendations, you can't. So if any part of that statement is false, the whole statement is false. Here, remember, we're looking for the opposite. So we got to do kind of the U-turn there. Short the stock and a short put hedge hasn't effectively hedged that. So the answer is A. The answer is A. And then remember, I also said we could also recommend short the stock and long a call. So I hope you found that helpful. Send your questions my way. I'm more than happy to explicate anything you'd like. Remember, inch by inch, your Series 7 is a cinch. Yard by yard, your Series 7 is hard. Wishing you a Merry Christmas. Bye-bye.